All right, we are going live. I know I'm a few minutes late. I apologize for that. I was having some technical difficulty, and for those of you that don't know me, that simply means that I couldn't figure out how to do something. That is all that means. Technical difficulty. That's me. I am usually the difficulty here. And so I'm sorry I'm a few minutes late, but what I do want to talk about today and what I think, wait, let me hold on. This is still going live. I have a few channels looking at waiting to come on. I'm sorry. I just got told to hold on here a second. So let me wait 1 minute. This is my fault for being late, but I apologize, but here I am. Okay, looks like we have one, two more to come on. Apologize for that. I am just waiting for a couple of social media channels to come on. I use the Restream. I use that company Restream to do all of my streaming. They're good. I mean, they're good, right? But it does take a little bit to. Oh, it looks like here we go. It looks like I'm fully on. So what we're going to talk about today, there's been a lot of talk lately about obviously, Trump winning the election. So there's like one side of the fence that wants to like beat up on everybody that didn't vote for him. And then there's the other side of the fence that is very upset that, that he won. So it's like it's going both ways. But some of the big discussions are really about what's going to change. And I mean, like, on a large level, right? And so Trump has made some comments about the Federal Reserve, saying that he doesn't feel that they cut rates fast enough. Effectively, that's kind of what I've gathered from it. But if you go online, you're going to hear a lot of chatter about that he's going to dismantle the Federal Reserve, or did those that were backing him know something the rest of us didn't? Because gold went through the roof, Bitcoin's going through the roof, and these are sort of alternatives. These are those two things. I don't know how gold supposedly is supposed to be involved here in a real way, because it's not like we could ever go back onto some form of gold standard. I mean, we could never do that. And we're going to talk about that. But the Federal Reserve, so that you want to get rid of the Federal Reserve, they're tying those two things in, saying that someone must know that Trump is looking to like get rid of the Federal Reserve, right? To get rid of the Federal Reserve. So there's a lot of misconceptions about what the Federal Reserve does, who they are, and whether they've done a good job, and kind of what would the fallout even be if there were no longer a Federal Reserve. Like, what would that even mean to people? And I don't think a lot of people really have any idea what it would mean. I mean, if you were to just drop the Federal Reserve today, first off, the whole world would stop economically. Everything would stop, because the Federal Reserve, we are the world reserve currency, and our Federal Reserve effectively not only controls the price of the some degree. They create inflation and they also eliminate inflation, which is the funniest thing ever. But they really keep chaos from reigning free in the open market. Now, when I say that, you have to understand that a lot of people, their complaint about the Federal Reserve is the fact that they do have that power. They do have that control, and they really, really do. And I get that, because why should someone else, if someone is in control? So if you're just someone out there and you're fighting to stay afloat, the first thing you do, and this is what everyone does, is they say, okay, who is in control of what affects my life most? What affects almost everyone's lives the most, aside from, the top 1% of the world, or maybe it's the top 5% of the world, I don't know, is the cost of goods in which they buy and sell, their mortgage, their rent, whatever it happens to be. Okay. And that is controlled through inflation. And that inflation is definitely controlled by the Federal Reserve, because inflation is nothing more than pushing a bunch of currency into the market. What does that mean? Look, if you break it down into the simplest terms possible, it simply means this. If you come to me and you say, I have $500, and I hand you 500 more, I go, well, now you have 1,000. What did that just do for you? What ability did that just give you? Now, mind you, this is happening to everyone else too. I didn't just hand you 500. The store owner that runs the store that you're going to shop at, I handed him 500, and then I handed your neighbors 500. I handed the car wash guys 500. I handed everybody 500. I handed the banks, I handed Wall Street, everybody. I gave them all 500 bucks. Here you go, here you go, here you go. What does that do? Does that affect how much you can buy? Well, if I give it to everybody and I gave it to everybody equally, then no, it wouldn't affect how much you bought. Well, all it would simply do was take what you used to buy for 500 and make it 1,000. What you used to buy for $5 and make it $10. That's all it would do. If it was an equal distribution of money, but it's not an equal distribution of money. Not by far is it an equal distribution of money, because when I give all that money to say, we'll just because we talk about the stock market here, let's say when I give all that money to Wall Street, when I give that to banks, when I give it to that group of people, and when I give it to the upper echelon of society that are business owners or CEOs, or they're high up in the corporate field, and these people that buy stocks, that have 401ks, when they all of those folks, the people that will buy rental real estate and they rent it out to others, they own it and then they rent, so they're in their own right, they're really a small real estate company. So those people, when I give them that money, what happens for them is quite different than what happens for, the regular. So either somebody who's young, they haven't even had a chance yet, they're just starting out, they don't have a date, so they don't own any assets yet. Right? They don't own assets. They don't own a home. They don't have stocks and bonds. They haven't been saving for 30 years, 40 years, whatever it is. So they have nothing. So all that you've really done to them is you've taken the cost of everything and you've driven it through the roof. And if they don't have some sort of if it doesn't create some sort of employment, meaningful employment that drives income up for that group of people, all they do is suffer. It's a miserable, miserable existence. Okay. And the Fed does that. But what the Fed also does, and what puts a pretty bow on the economy, is for those people that own investments, stocks, bonds, gold, real estate, Bitcoin, you name it, crypto, NFTs, what people that own that stuff, what it does for them is it drives the value of that stuff through the roof. So their net worth just soars because they owned assets. So they're going to love inflation. Imagine this, your home goes up in value from, 2019 to 2022. It goes up 30% in value. Now, let's just say that you don't live in a giant home, but you do live in a popular area. So your home was worth $500,000. Well, your home, let's just say your home is now worth, so you had 500,000, now it's worth 700,000. That right? So you just made $200,000 on that home. So if you pay an extra 75 cents for a loaf of bread, or an extra dollar, or your grocery bill each week goes up by $300 or $400 each week, if those bills go up, do you care? You just made almost $250,000 on the home you own. You don't really care what a steak costs, what bread costs. What do you care? If you're 55 years old and you have a 401k and an IRA and a Roth IRA that you've been matching, you've been saving your whole life, and you stocks and bonds, and you did it right, you own some of everything. You didn't try to get fancy with your investments, although I am a firm believer that if you have optimized the financial plan, the next thing you do is optimize the investments. I'm a firm believer of that. But if you're that person and I push your assets up, just look at what has happened to the stock market from the low in 2020 until now. It's in the Nasdaq, it's almost 200%. In the S&P, it's like 150. In the Dow, it's a little over 100. You're excited. You love it. Inflation is the greatest thing for you. It's amazing, because you've taken these big chunks of money that you saved. So you had $1 million in your retirement account. You're 55 years old, and that is now up. Say you didn't even keep up with the market, but say you were in tech, you had a diversified portfolio. We just said that the two major markets are up 150% and 200%. So let's just go on the low side. So you had 1 million. Now you have 2.5. So you were in the S&P, you kept up with the S&P index, all right? So now you have $2.5 million. Your $500,000 house is now worth 700,000. And your grocery bill's up $400 a month. What do you care? You don't care. That's it. So what? So you can see here, when you talk about the Federal Reserve, when you talk about inflation, you can see why there's a group of people that wants to protect that because it benefits them. And then there's a group of people that go, wait a minute, this is a nightmare. This is horrible. If you're young in this country right now, there's no way you can appreciate what the Federal Reserve does for an economy because for you, it's garbage. Burn that thing down. It increased the amount of currency in circulation in 2021 by 50% all at one time, which guaranteed massive inflation. Guaranteed it. There was nothing else that was ever going to happen. They knew exactly what they did in 2021 when they increased the US currency supply by 50%. They knew what they were doing. They were causing inflation. They knew it. So if you're a young person right now and you're going like, this thing sucks. Dismantle it, burn it. I don't care what you do to that. That's terrible. It's you're upset as you should be. Like I think any rational, normal person might be a little bit upset if that's the case, right? Um, I certainly would hope that you're a little bit upset, given what I just told you. So the Federal Reserve does that, and the Federal Reserve also does the opposite, which is sort of funny. So the Federal Reserve not only creates inflation, but it also stems inflation. So its goal is to create this massive inflationary environment, which, as we just talked about, there's a group of people that own assets, they own stocks, bonds, real estate, land, whatever. They own assets that they love inflation because a $300 increase in their grocery bill means nothing to them. Who gives a crap? A $500 a week increase in their grocery bill doesn't mean anything to them. They don't care. They have savings, they have money, they have assets. Inflation's amazing. Inflation's absolutely amazing. Now, here's the thing with inflation, though, and we're kind of at this point right now in the real estate market. For those of you that are unaware, so in the real estate market right now, what's happened is not only did prices get inflated, but interest rates also go up in an inflationary environment. Rates rise as well. So what happens in an asset class like real estate, which if you own real estate, initially you love it. I mean, you absolutely love inflation. It pushes the value of your real estate through the roof. But when you get a couple years down the line, a few years down the line, like right now, as we are in real estate, the reason that you no longer like it is because if rates double, which they have, and the cost of a home increases by 30%, which it has, effectively what you're going to need. So, right now, for us just to get back to the affordability of 2022, we need roughly a 40% drop in the price of real estate, residential real estate. That's effectively what you need. If you want to talk about the value of the real estate plus the increase in interest costs, so a few years back, if you would have went back to 2020 or 2019, you get a $400,000 mortgage, your payment will be 2,300. Right now, it's going to be 34, 3,500. Same house. 23 to 34, 35. So that's not even including the increase in the value of the home. I've seen some people estimate for this real estate market, the residential real estate market to come back to life, that you're looking at things like 50% and 60% declines in price. And that's just to get it back to where it was. That's not even actually like a loss in real estate. That just gets it back to affordability. Why do we care about affordability? Why does that matter? Supply and demand, that's why. Corporations came in and giant conglomerate, like the world's turning into this epicenter of giant conglomerate corporations that just run the world. We live in block houses that are painted white and gray and black, and we pretend that they're like somehow like modern and sleek and beautiful. They're junk. They look cargo containers just painted different colors and stacked on top of each other. It looks absolutely ugly. It's terrible. We are living in the epitome of business. Okay. I don't want to get away from the subject, but something that I say all the time is anything at its highest point, anything in its greatest form is art. Anything kind of in its lowest form is just this money making scheme for business. Anything in its lowest form is just some money making scheme for business. Who can I copy? Who can I replicate? How can I market this better? It's for me, it means nothing. It's no good. I can't stand it. But anything in its highest form is art. So right now in housing and kind of in the world, just if you look around the world, I mean, everybody's trying to look the same. Everybody's trying to act the same. We're living in these shells. There's nothing beautiful anymore. It's like it's you can see where we're at. And so these giant conglomerates, these humongous corporations, which by the way, they don't follow the same rules that you do. Now, in the United States of America, these companies are people when it suits them. They're people when it suits them. Okay. Meaning that when they want to give campaign contributions, they're just like you or I. They can give unlimited campaign contributions. Now, If their industry gets in trouble and they need a bailout, we have to protect the corporations. We have to protect corporate America. So we bail them out. So they're not they're not you anymore. Oh, when it comes to their taxes, they're not you either. They're different than you. Okay, they're different than you whenever it suits them, and they are you whenever it or wait, they're different than you when it suits them, and they're you when it suits them. It's the most ridiculous hypocrisy I've ever seen in my life. It's an unbelievable thing. And so these giant conglomerates that are collecting money, they're paying interest rates of 1%, less than 1% on a 30-year mortgage rate. Now you're paying 7%. You pay 7, they pay 1. They have billions in reserve. You have, whatever you have. I don't know what that number would be, but you have much less than billions in reserve. They have massive cash reserves and they pay nothing for the real estate. So guess what? They can sit there and hold it and try to wait you out. And that's what you're having right now in the real estate market. My personal opinion, and you'll see all over the place all of these excuses, but I'm telling you what I have witnessed for myself. And that is that there are these homes on the market that sit now for a year or sit for 2 years. And I'm not just talking about for sale, I'm talking about for rent as well. And when a home sits like that for sale or for rent, that's not a person, because a person cannot withstand that length of time. Do you know that if you lose a year's worth of rent on a rental property and you're a guy who has 3 or 4 rentals, do you know how long it would take for you to make up for that? Most people in real estate, if they're renting residential real estate, they can't afford a month without someone in their place. Okay. And you have companies now, and you can go on for yourself and take a look. You can go on to any of the rental apps you want to look at, and you'll find homes on there for 2 years. You'll find homes on there for a year and a half. So that has kind of supported that inflationary environment in residential real estate. It's just allowed things to sit on the market longer than they should have. Because as we were just talking about, the Fed Reserve created this inflation when it increased the currency in 2021 by 50% all at one time. It created the inflation, and now it has to suck the inflation back in. Real quickly, everyone, I have a course that I utilize. It is a course that I sell. It's an invest like a pro course. And what this course does is this course allows you to set up a financial plan. Let me show that. It allows you to set up a financial plan, a professional financial plan based on Monte Carlo simulation. It shows you how to set up asset allocation. I walk through the different retirement accounts, the different trust accounts, the different individual accounts, how to set up an account, how to place a trade, how to rebalance. Effectively, what it does with 7 hours of tutorials and 70-page workbook is it walks you through how to set up a financial plan the exact same way that anyone that works at Merrill Lynch or Wells Fargo Advisors or anywhere is going to set up for you. Okay. Smith Barney, Raymond James, Edward Jones, any of the major wirehouses, any of the major banks, that course will do it. It will walk you through exactly how to do it. I know I worked at Merrill Lynch, Wells Fargo Advisors for nearly a decade and a half. I have my own shop for about a decade. I've been in the industry for 25 years, and I've done 1,000 of these. I put this together. It has all the software you ever need. And right now, I have this discounted nearly 95% until midnight tonight. $23 for the Invest Like a Pro course. Typically, it's $500. Tonight at midnight, it will be back to its regularly scheduled price. Okay, that's enough of that for now. Back to the Federal Reserve. So, the Federal Reserve, it has to rein in inflation. Okay. So what it has to do is all that currency that it put out there, it has to get it back, but it has to do it slowly and carefully enough as to not have prices nosedive. Because think about this. If I put all this money into circulation, I give everyone all this money. So everyone now has money. Their $500 is now $1,000. And prices. So now a home costs you $750, a car costs you $200. I don't know what the ratio there is. That's probably way off. But if I simply gave you that 1,000 and now you went out and you spent it on these items, and then I said, give me the 500 back, and I took it, if I took it from you, what would happen to all of the items that you purchased, or the items that your neighbors purchased, or the items that anyone had purchased? What would happen there? Well, no one will be able to buy them because they wouldn't have any money. And anybody that would be able to buy them, maybe they used to have $750, maybe they used to have $800, but I just took that. So now they only have 500. So guess what happens to the value of that in this analogy house? Guess what happens to the value of that house? Boom. And right there, you can cause a panic that leads into a recession. That probably a panic like that would lead into a depression, especially when you're talking about the amount of currency that we pushed into circulation in 2021. So what the Fed has to do is it has to that's where you hear the term soft landing. You'll hear the guy, oh, we're expecting a soft landing. We're expecting a soft landing, meaning what people are expecting, what the market's expecting, is that the money that was pushed into the market, they're going to be able to bring it back out without creating major chaos. Okay. That's one part of what the Fed does. So I'm going to do this kind of in a series. I'm going to do this over the next week. So let's continue just right on this path, right? So what we're talking about is money. And so what we're talking about is currency and we're talking about inflation. We're saying what would happen to the Federal Reserve if Donald Trump came in? Some people have said, he plans to dismantle the Federal Reserve. I think younger people are probably hoping for it for the reason I just explained here today. If you owned assets, this has been a great environment for you. If you didn't own assets, this is the end of the world, right? It's just been extremely painful for no real gain for you. So you're upset about that, which makes sense. So you would love for somebody to tell you, yeah, we're going to get rid of those guys. Okay, but here's the thing. It also funds what the government does. So it funds all the government spending. So all the programs, that's the Fed funds it, right? If you think of the Federal Reserve, I'm going to make it as simple as possible for the next kind of analogy we're going to do. The next concept we're going to discuss is the US currency and the fact that we are the world's currency reserve. So if I have all the money and I'm the Federal Reserve, I lend it at a specific rate, then you're the one that owes interest. That's why the federal government is so far in debt. So it just keeps driving debt. And just like you, if you had a credit card, if you have a 30% credit card, you keep using it and you're not paying the interest and principal. If you're not paying both of those, you're going to sink deeper in debt. That's the US federal government, but that's also every government around the world. When people start talking to me about what the US debt is, I say, well, what's the debt of everyone else? Is the ratio of debt to GDP the same here as it is everywhere else? Because if it is, then it really is a zero sum effect. And I don't care. Okay. Not that you want to keep sinking into debt. I mean, to be fair, if you're a government, if you're supposed to be the head of the largest corporation in the world, I would hope you learned how to balance a checkbook. I would hope you had figured out how to do it the right way. But what we've seen lately is just spending, 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 right? I mean, that's just what we've seen. So, currency, world reserve currency. What happens to the US currency if there was no Federal Reserve? If there was no Federal Reserve, what would happen to the US currency would be real similar with no one in charge. I mean, nobody. Because remember, as things get bigger, and no one likes to say this, I'm not some big regulation guy. So before I make this next statement, let me just kind of give you a caveat. I am not a regulation guy. All right. I am one of those guys that thinks that everyone should make their own decisions. When you make those decisions, you live with the consequences, but feel free to make whatever decision you'd like to make. So the Federal Reserve inherently to me is big brother. I don't like that. But let me tell you what would happen with currencies if you didn't have a Federal Reserve, or what the potential is right now. I mean, first off, if you eliminate a Federal Reserve tomorrow, the world economies would collapse. You'd go into chaos and we'd all be shooting each other in the streets. That's a fact. So unless you are the Joker, but I mean for real, like the joke, like you don't care about anything, you just want to see it burn. I hope you know what that means. And so if you're just some spoiled like middle class kid and you think you want to see that, you have no idea what you're even saying. There's no way you want that, because that would be the result. It would look a lot like, I mean, you would go into it would even be worse than like Bitcoin, right? Like Bitcoin, because Bitcoin does have a value, and we're going to talk about that now. Bitcoin's real value. I think a lot of people understand even what Bitcoin is, but I want to talk about it today because it falls in line with this currency conversation. So currencies would be crazy, just like Bitcoin is. Like I remember when Bitcoin climbed from under 1,000 up to 20,000, and that was in like 2018. It hit 20,000, then it reversed down to 2,000, then it went up to 60,000, then it came back down to like 17,000, and now it went up to what are we at today? 89,000. Went to 89,000. I think we are now. But the point of that is like that, if that was a currency, How would you run a business? How would you run anything if Bitcoin isn't a currency, but we're using this as an example of what like a Federal Reserve list. So just I don't even want to say chaos. There's just no Federal Reserve. What that might look like. It could look a lot like that. Now, how do you run a business in that situation? How do you set a price? You can't. You can't set a price. It's impossible. You wouldn't be able to function. Should something cost $1,000 or $1,000,000? The price changes at the time of transaction. How would you ever know the value of anything that you owned? So there's a lot that goes into that that you wouldn't know, right? You would have no idea. Now let's talk about why Bitcoin exists and why I think that I do believe that Bitcoin and the crypto world is probably the future of currency. And let me explain to you why. For any of you out there that are thinking that what I just said is ridiculous, this is why I think so. So what's been the problem with currencies historically? Well, when we took over as the world's reserve currency, the United States had, I think it was about 15, maybe it was 17% of the world's gold. That's what we had when we became the world reserve currency. So there was a lot of gold out there, right? So basically, what happened is we attached the value of the dollar to gold. By 1974, the US had owned 75% of the world's gold. That's a ton. Okay. It's a ton of gold. Even right now, we hold more than 2.5 times the person that's just below us in gold ownership. But gold ownership isn't, I'm not 100%. I'd love to talk to somebody about gold, and I don't want to say something that's incorrect because I don't know why gold matters so much anymore. I mean, it's pretty, it's a nice jewelry, but it's not attached to anything anymore. So I'm not sure. But anyway, 74, the US had 75% of the world's gold. Now, here's the deal. What happened was we need to create more currency. Why? Because the world grows, growth grows, economies grow, everything grows, and we're the world's reserve currency. So we need more currency. The problem was we had all the gold. So we had all the supply. We couldn't sell the supply. It's not like there's an open market for gold where people are just buying tons of gold, right? So we were stuck. We were stuck. That's why we went to a fiat currency. What's a fiat currency? A currency that is simply a currency that's based on nothing. It's based on nothing. So you can print as much as you want. You can do whatever you want. But what happens with a fiat currency? Well, with a fiat currency, you have no control over what your government spends. They have no handcuffs. See, if gold is only climbing at 2% a year in value, you only have 2% more currency you can make. There's a cap. You're held, right? You're held down with chains. But then at a certain point, if you own a commodity that's physical and there's no more of that commodity, you have no more currency because you're attached to it. Then fiat currency comes in. Now you're not attached to anything. And that's why government spending is what it is. It's insane. I mean, government workers, I don't know the percentages here. And I would love actually to look. I should probably look this up before this conversation, but I didn't know I was going to go this direction. But it seems like when I go on to governmentjobs.com, it seems like government workers are making a hell of a lot more than private workers are anymore. And that makes no sense. So just from my perspective of that alone, governmentjobs.com, go look for yourself and see what government employees are making now as compared to what the private sector is making. The private sector is the one, by the way, that pays the bills. The government workers are the bills. So it makes no sense that that would be outnumbering the private sector. But as far as wage goes, and I mean, when I look at it, that's what I see. So anyway, that's why the government is what it is now. So what's the problem here? Well, we can't have we can't have a commodity that's real. We can't have a real commodity as the basis of our currency because when we run out of it, when we have no more of it, we're stuck. And if you're the world's reserve currency, you can never run out of currency. If you have a fiat currency, well, your government gets to run wild, inflation gets to run wild, and there's nothing to hold it back. So the beauty of Bitcoin and the genius of Bitcoin is you can mine Bitcoin. So it never stops. It's not like something you're mining from the ground. It's not ore, right? It's not gold. It's not silver. It's not something that has to come from a hole in the ground. It's something you're creating through energy, right? So it takes a lot of energy to mine for this Bitcoin. So it can grow, but it can grow only at a certain rate and it can only grow at a certain pace. So if you attach the value of your currency to it, it does a couple of things. It does put a level of handcuffs on your government. They can't just spend whatever they want, right? That they can't do that, but they can continue to spend, and you can be the world reserve currency and you can continue to spend. So that's why I think that we head towards Bitcoin. Now back to the Fed Reserve. What when we say the Fed Reserve, what's the Federal Reserve's major role? It's really to avoid is for the US dollar, it's to maintain the value of the US dollar, right, to a certain degree, and is to avoid currency chaos, like just outlandish, crazy like ups and downs of a currency. It's there to create some level of like, neutrality, some level of levity to currencies, okay? So when I said how good of a job is the Federal Reserve doing in maintaining some levity within the currency markets? Well, if you compare the U.S. dollar to a Bitcoin, right? Which Bitcoin is not a currency, that would be your gold standard. Bitcoin is more like that. That is the gold that the currencies are attached to. So how well have they done at that? They've done pretty darn good. They've done good as far as that goes. I mean, if you compare it to over here, where you go from 2,000 to 20,000, or 20,000 to 2,000 to 60,000, 17,000 to 89,000 to I don't know what's it going to be this time? 34? I don't know. Probably a little lower, maybe. I don't know. I'm just saying, like, you can see that there are controls there. What else does it do? It's regulations. There's banking regulations. There's regulations in those markets, so they can't be as heavily manipulated. All markets are manipulated because all humans are invested in all markets. If humans are involved, there's going to be manipulation because there's certain people that aren't interested in fair play or any of that. They are there to win. They crush the competition, right? They don't care. They're a warrior. They defeat everybody. Blah blah blah. I don't buy into any of that, by the way. That is the way that business tends to function. I don't agree with it, right? Like, I think there's a way that people can win, and both sides can win and everything can be fair. And it doesn't have to be that way. But there are people out there, they don't agree with that, right? They want it all. That's just the way that goes. And when that exists, that's why you have to have regulations. Again, I am not someone that looks for Big Brother to protect him. I am not someone that looks for to have someone have oversight to control the value of my currency, to control the value of anything that I do. I am not that kind of guy, but I'll tell you that in a society this large, you will have to have regulations, and those regulations are there to help those that really don't know how something works, or just protect those that are coming into the game and they're new. I'm going to leave it at that for today. I want to share with you. I also have one more special going on until midnight, so I'm going to share it with you now. This is going on, and I promise you it's until midnight, and then it will be back at full price. This is my intermediate trading, investing, and forecasting course. This course sells for $2,000. I have it again discounted up to 95% until tonight at midnight. It is discounted down to $100. If you are interested in learning how to identify those big footprints of big institutions making big moves through the study of price, through the study of volume, through the study of gap theory, and then breaking down time frames so you can identify price points and identify when it should get there. If that interests you, this is for you. For those of you on TikTok, go to my profile. It is prometheaninvesting.com. The course is intermediate trading, investing, and forecasting. The coupon code is intermediate 95, intermediate 95. So for those of you that are on LinkedIn, Twitter, Facebook, Instagram, I'm probably forgetting LinkedIn. You have the QR code up, and I have the coupon code up there, intermediate 95. Those of you on TikTok, you go to prometheaninvesting.com. You go to the intermediate trading, investing, and forecasting course. The coupon code is intermediate 95. I am going to go ahead and put up my Invest Like a Pro course as well. Let's see, Invest Like a Pro. There we go. I have an Invest Like a Pro course. This takes you from I don't know anything about finance to setting up a professional grade financial plan built on Monte Carlo simulation. You get all the software you need. I have videos in there, step-by-step tutorials, 7.5 hours of information, a 70-page workbook that walks you through. It's a digital PDF, so all the links are there. You simply click on them. Invest like a pro. If you are on TikTok, it is prometheaninvesting.com, and the coupon code is PRO96. If you are on the traditional channels, you see the QR code, and the coupon code is PRO96. Thank you so much for joining me. I will be back tomorrow morning at, I believe it's going to be 8:15 a.m. if you are on Eastern Standard Time. It is going to be 5:15 a.m. if you are on Pacific Daylight Time. And I will be discussing the market pre-market. I'll be discussing the market mentality at 5:15 a.m. Pacific Daylight Time, 8:15 a.m. Eastern Standard Time. The market mentality. I'm going to run through some different things that we see going on in the market right now. Yeah, so I'm going to do the market mentality then. These my evening live shows are going to be stories of a financial advisor. I'm going to share with you things that have happened to me as a 25-year financial advisor, and the mistakes I've seen and how you can overcome them. I want to thank everyone for joining me again, and I will see you tomorrow morning.